Under the Hood with Dimitri and Mustafa.
Welcome to another episode of Under the Hood. Dimitri. Again, I want to do this 15-minute episode this time because I got a lot of feedback from people that I know. They wanted to know everything, the scoop in 15 minutes. So I'm going to, let you speak here and probably throw a couple questions at you. But what's going on in the market today? Mainly what's going on with SVB?
Yeah, man, listen, today was a crazy day. Market opened up. I actually remember rolling out of bed and, pulling up my phone while I'm sitting on the throne.
In the same clothes?
Yeah, in the same clothes probably. And seeing that the market was down 500 points. Now Credit Suisse, which we heard, I don't know, most people probably didn't realize or didn't know this, but the last earnings release that Credit Suisse announced, which I think was maybe about 45 to 60 days ago, maybe perhaps longer, but within the last 2.5 months, I would say, they were the worst earnings that the bank had ever released or announced. Mm-hmm. And then now we get to today, which advanced two months, forward, and the bank is ready to collapse. And this evening, which most people don't know, and the headlines do not denote what really truly happened, the Swiss National Bank is actually lending Credit Suisse over $50 billion this evening. So as much as the headlines aren't saying another failed bank, it obviously is, because the National Bank is essentially bailing out Credit Suisse this evening. Mm-hmm. So what is that going to spell for the markets tomorrow? It's anybody's guess. But I can tell you this, Mustafa, that there's a lot of noise around what the Fed's going to do, right? They're meeting soon. Are they going to raise rates? Everybody was saying a quarter point. Then just recently, we had some inflation numbers that were pretty high, above estimates, and you and I discussed that a few shows ago. Mm-hmm. Then they peeled it back to about a quarter point, saying, well, now SVB collapse, maybe they won't raise at all. Then they kind of went back to a quarter. Now this evening, we've got another failed bank in Europe, and the majority of Wall Street's thinking that the Fed isn't going to raise rates. And I'm going to tell you this, Mustafa, think about it. All of these events, to me, are negative and continue to make me bearish when it comes to overall investing in the market these days. Why? Because if the Fed is so concerned that they're going to come out and abandon their policy because there are bank failures across the globe, that means that this is a major problem, because we just had an inflation number that came out, I believe it was yesterday. Yeah. And that number was in line with what expectations were. Now, when they looked at, brought in fuel and food, inflation was a little bit hotter, but overall we did see not necessarily a cooling, but we saw expectations being met, which we haven't seen for the last couple months. We've seen a surprise to the upside. So you've got that going on. You've got now these failed banks across the globe, mm-hmm. and everybody's thinking the Fed's just going to abandon their policy of fighting inflation to protect the financial institutions or the integrity of capitalism. Yeah. So it's going to be very interesting to see the next 48 hours, right? We're at Wednesday here in the United States. We've got Thursday, Friday ahead of us. Tomorrow, I'm sure the markets are going to open up negative. I mean, they should have ended the day down 1,000 points, if you ask me. Sure. They were down only 280. The Dow was down about 280. At one point, the S&P 500 had given back its entire gains for 2023, meaning since January 1. So, there's a lot going on there. But here's another thing, Mustafa, when we talk about our investments. Those of us who have decided to stand on the sidelines with our retirement funds, This is a great example of what's going on, and when you need to take note and need to make a determination whether you want to get out of the markets or not.
Mm-hmm.
If you invested your paycheck back the first week of February, right, the second pay period in February, and the third or the first pay period in March, all of those funds, let's say you invested $1,000 out of your paycheck to your 401k during the month of February, March, you no longer have $1,000. And that's what's key here. The S&P 500 may still be up for the year, just so ever slight, way under a 1% at this point. But you're investing those monies when at the end of January, the market had recovered considerably. And I think the S&P was, 6 or 7% up.
Mm-hmm.
But every time that money was coming out of your paycheck, the first pay period in February, the second in February, and that first in March, all those funds have lost value. Okay. So that's what you got to think about. You can't just think about year-to-date numbers. You got to think about the loss that your money has incurred if you are continuing to invest those funds.
What would you
right?
do?
If those funds are coming out of your paycheck and they're going into a money market, let's say within an IRA, that's okay. But if those monies, you haven't reallocated your investment choices to be in cash, and you've continued to leave them in mutual fund instruments, right, that have a bunch of securities typically under them as their investment vehicles, those funds that are coming out of your check are going straight into there, and the market's is going down every day. I mean, I don't know how many red days we've had in the last 10, but I think it's either 8 or 9. So, your paycheck, I don't know about you, Mustafa, I got paid last Friday. Okay. A wonderful day getting paid. But that money came out and was invested Monday morning. And guess what? What's happened since this past Monday to today? The market's down, 1,000 points?
Yep.
So you lost money. If you put in $200, maybe now it's worth $180. And in order to recover those $20 and get beyond, that $200 amount is going to take a lot, especially in the current environment that we're in. So there's a lot going on in the markets, right, Mustafa?
Sure. Yeah. I mean,
you didn't know about this Credit Suisse stuff, right?
I mean, I was extremely busy today and barely kept up with everything. I'm glad you mentioned it. What do we know about Credit Suisse? Is this a? I mean, we kind of know the background on SVP. We've known regarding some of the other banks. We know the story. One was concentration in startups, concentration in crypto. What's the story with Credit Suisse?
So, it's interesting because my experience with Credit Suisse, it goes back to when I first started working in the financial industry. And at that time, it was actually called Credit Suisse First Boston. Okay. And I remember they were a customer of mine there in Manhattan, and they had a beautiful concrete building that was, just had a tremendous amount of presence, and it was kind of built in an architectural period that would be, kind of more of the the Roman times, right? Sure. It was just a cool looking building. But what happened with Credit Suisse is, they raised their hand, no different than SVB. They raised their hand the other day and said, hey, we need some money. And they went to their biggest investor, okay, out in Saudi. And the Saudi bank said, no, we ain't giving you any more money. So then that became obviously big news, just like SVB when they went out to the market to raise some capital. So same, very similar. And that's, that's pretty common, right? I mean, how else are you going to find out? You're going to find out by these companies going out into the open market and asking for something. And then that's when it either becomes newsworthy or, never known.
But they saw but the issues were there from the beginning, as you were saying. They reported their numbers didn't look good, and then
bad.
Now we're seeing
numbers.
This with SVB. Yeah. I don't recall if they
They were
report.
starting, their numbers were
Yeah.
starting to deteriorate. I
Yeah.
mean, not as significantly as
Yeah.
Credit Suisse, but
Yeah.
their numbers had deteriorated as
Credit
well. And then, hey, look at I sent you a bunch of news today at
Sure.
the end of the day about more layoffs, right? We got some over at our friends at Facebook. We got another 10,000 at Meta that are being laid off.
Yeah.
Analysts are looking at that and they're saying that's a positive. They believe, business is ready to kind of lurch forward again. Who knows? I don't know Facebook that well. Then outside of that, I think there was some other things I had sent you. I can't even remember what they were, but I think one had to do with some more layoffs, possibly. Oh yeah, and then we saw a crazy thing. I sent you this on Virgin Orbit. I don't know how many of you are familiar with this company, but it's obviously a sibling of the or a subsidiary of the Virgin company, but Virgin Orbit went public way before COVID, maybe 3-4 years before COVID, maybe longer. They had a very, very high valuation attached to the name. And obviously they were, looking to get people up into space like all these these other competitors of theirs. So it was the company that they were talking about on CNBC every day over the course of I would say over a year. And because of what's going on in the banking sector right now, first of all, the inflation numbers, you probably didn't hear them, that they were in line because that was under the fold. The banking crisis is on top. And you also didn't hear about Virgin Orbit laying off or furloughing almost all their employees today. And they're going to be closed for a week while they search for additional funds to keep the doors open. So we've got another company that, like I said, pre-COVID, they spoke about on CNBC every day. This whole galaxy, going to space was a really big thing. And all these companies are coming out of the woodwork, and Virgin Orbit, big one. What's his name? Richard Branson. Pretty popular celebrity dude.
Yep.
So they like talking about him, and he seems like a nice guy anyway. But they company out of business, probably. I mean, where are you going to get funds? How are you going to raise capital for some pie in the sky type idea like that right now? No one. Those funds aren't available. They're on the sidelines, like you should be. Yeah. That's what I feel like. You should be on the sidelines right now. And that's just in terms of the safest place to be, Right now, people may say, well, it's not safe to be in banks. Well, I mean, choose the form to keep your wealth in, but the markets certainly are not, a great investment at this time. And I think we're going to continue to see the market bleed down over the course of the next few weeks. There's mass confusion. No one knows where the Fed's headed. And we'll get some clarity on the Fed soon. But that's really it in a nutshell, Mustafa.
So Credit Suisse is the second largest bank in Switzerland.
Yeah, probably in Switzerland, yeah.
Wow. That's
because you have
pretty big bank that's having some issues. I mean,
in a very wealthy country, right?
Yeah. That's interesting. So, I'm just curious what kind of decisions they made.
Yeah.
We'll see what happens.
Well, I think with Credit Suisse, Mustafa, is they have a pretty sizable presence in in the United States. So although it is a European entity and they do a whole heck of a lot of business there, they do a whole heck of a lot of business around the globe. And since the U.S. has the largest economy, they do a lot of business here. My concern is what's the exposure, and see I guess what my concern is we're seeing these we're calling them quote unquote bailouts, okay, without knowing the exact composition or the way the funds are being granted or given or lent to these banks. We don't know all that, so we're just going to call it a bailout. Without these bailouts, we'd be really in deep Bandini. But you kind of wonder, like, when does the money run out? How many can you bail out? So, if we have a significant bank like a Chase, a Wells, B of A start to show some problems, then there just isn't enough money probably to shore up in order to save and protect those businesses. So, you kind of wonder like where, and the thing is, I'm going to tell you this, Mustafa, which is really crazy, is that Credit Suisse has that bank's failure, okay? And fortunately, there was money, okay, that was made available to them, but they're still borrowing that money, if I understand correctly from what I've read. But Credit Suisse's failure has huge ramifications for the banks in the United States. So I'm very interesting to see what terms this deal was putting in place, right, to allow them to continue operating, to see if any of these other banks, in particular here in the United States, are going to be affected. And I think they will be. If there's any European bank that has a significant effect on the U.S. financial system, it's Credit Suisse. I mean, they're very, they're a big player on Wall Street, big player on Wall Street. I mean, this is a massive company. I mean, they're involved in everything from insurance to stock trading to, I mean, you just think of like a Chase Bank, very similar. So, we'll see tomorrow. But like I said, I think that the exposure that U.S. banks have to Credit Suisse is much more significant than it was to SVB.
Really?
Oh, yeah, because now you've got Chase, you've got Citibank. These are world global players that are in bed with Credit Suisse. They're doing deals each and every day together. I mean, they're sitting across from the table. They probably even have shared offices. Yeah, and they work together across the globe with global and international companies. So, there's a lot more exposure than SVB. I mean, SVB is like a hometown bank compared to what we're talking about here. Mustafa, you've probably seen in the news, and now it hasn't been talked about for a few weeks. We got a government debt problem that we have to deal with here soon. And the politicians were talking about it a ton before this bank collapse. But we've got and the Treasury already warned that we need to figure out what the heck we're going to do, because it looks like we're going to default. And so, the U.S. doesn't have a ton of money sitting around either. I mean, they could turn on the printing press, but they don't have a ton of money. So, how much bailout money is even left? I don't know. I don't know what tax revenues look like for 2023. We'll find out later in the year. But, and just in terms of these, the government, I mean, they can't do much. So they're asking for private, industry within that specific sector or industry or sub-industry, like is the case with banks, sub-industry. I mean, they're calling on them to help out here. So that's how I would see that and interpret it. And I did read just a one-pager that did talk about the whole Chase, connection with the bank. But yeah, I don't know. I mean, I don't know what to expect next. We'll see, huh?
Yep. We'll see. Hey, I was going to tell you, I got some good news and bad news. You want to hear the bad news?
Yeah, what's up?
I forgot to press the record button.
Are you kidding me?
Good news is we can do it again.
What?
I'm just messing with you.
Oh, shit. You're funny.
All right, cool. Well, that wraps it up. So hopefully you guys like what you see and leave some comments. Feel free to engage. And then on the next episode, we'll definitely answer any questions. But I look forward to connecting with everyone in the comments section. Feel free to subscribe. Don't forget to press that button. I hate asking.
Just press it.
I just feel like I'm standing on the street and asking people for change. But
that's how it goes in today's world. Huh?
If you press that button, we'll know that people want to see this more often, and we'll keep on going with what we're doing, and hopefully it could get more detailed, and we'll try to put more effort in doing it consistently on a day-to-day basis. Right now, we're trying to just, gush what we can gush out. All right. Thank you guys. Appreciate it.